If you're a busy professional or even retired and you're trying to make smarter moves in a noisy market, this episode is your weekly edge. I'm Jake Falcon, the founder and CEO, and your host of Upticks, and I'm joined by my special permanent guest, Cory Bittner, the co-founder of Falcon Wealth Advisor and co-host. Cory, how are we doing today?
I'm doing great, Jake. Thank you. Nice, strong start too. Set
You
the
like
tone.
that?
Set the tone early. I like it.
All right. So, let's talk about the framework of today's episode, Cory. So the Fed recently held rates steady, but hinted at a cut, right? And they had open conflict. So we're going to talk about that today. The S&P says America stays at AA plus ratings, yet warns of deficits, slashes the sticker shock to $499, I guess a prescription cash, and targets naming a new CEO while ending a big partnership. And today we're going to talk why all of this matters for your investment portfolio. All right, Cory, you ready?
I'm ready. Let's talk about it.
And I think you had a bonus topic, right?
I did.
So we're gonna talk about that at the end, but we'll go over your bonus topic at the end. So thanks for adding another topic to today's show.
Okay, sounds good.
Starting with the Fed held rate steady in their recent Fed meeting, but two governors favored cuts. And actually, just this past Friday, Jerome Powell hinted that there may be a cut. But the key is that this might be the first multi-governor opposition in 30 years. And so the minutes of their meeting show that there's a split. There's concerns between inflation and employment, plus tariff/political uncertainty, and including obviously more pressure from President Trump. So Cory, our listeners, they feel whiplash. Are the rates coming or not?
The rate cuts?
Yeah, sorry. The rate cuts. Yeah, are the rate cuts coming or not? Are they?
Yeah, if you're asking my opinion, I think the answer is yes.
I
think the answer is yes.
Okay,
I think
why?
the cuts are coming. I think the cuts are coming because of the way, one, the Fed has telegraphed it. Two, if we just take the politics and everything out of it for a moment and just look at the data, like the bond market itself, the 2-year yield is a really good indicator of, roughly where the Fed funds rate should be. And that's been something that's well respected. I think the bond market has said that interest rates on the short end should come down a little bit. And that's why I think that's what's going to happen. I think everybody will listen to the bond market more than me or anyone else for that matter.
Yeah, that makes sense. So here's the opportunity. And again, we don't know. So the next Fed announcement will be, I believe it's September 17th. Is that right, Cory?
That's right.
Yeah. September 17th. And so the opportunity here, though, is that you want to recheck your cash positions and make sure that you're leveraging a high yield savings account. And you want to look at your cash versus your risk. So basically your cash versus stocks and bonds, and consider, like you talked about, laddering your bond portfolio, because the idea is that if you don't have your bonds laddered, and laddering is just basically staggering out the maturity dates. But if you have all of your money in a 1-year CD, or you don't have a bond ladder, what happens is when the Fed lowers rates and if bond yields go down, well, you're going to have to reinvest this money in lower yielding bonds, which is not a fun thing to typically do. So the key here is this is education. This isn't advice. But my point is the opportunity today is to make sure that your cash is structured the way that it's supposed to be. And then if you have a bond portfolio, maybe you want to make sure that it's laddered just in case rates go down. Here's a big myth out there, Cory. I want you to answer for me, though. Here's a big myth that people think that when the Fed lowers rates, that mortgage rates will go down also. Is that true or false?
False.
Okay. Wow. Why?
The Fed doesn't control mortgage rates. The bond market does. That's
good, Cory. And what is a typical 30-year mortgage rate predicated on?
The 30-year treasury yield, along with the 10-year treasury yield. Both of those influence what mortgage rates look like.
Right. So, and the Fed, this is what our audience needs to understand, is the Fed controls the short-term interest rate, right? So they're not controlling what the 10-year treasury bond is yielding or the 30-year or whatever. So sure, it may shift a little bit, but I don't want people that are out there looking to buy a home, Cory, and need a mortgage thinking that, hey, I'm just going to wait till September 17th and the mortgage rates will be cheaper, because that might not be the case.
That's right. In fact, I think I've talked about this on Upticks before, Jake, but a year ago, last September, when the Fed cut interest rates for the first time in a couple of years, that was the day that mortgage rates bottomed. They started moving higher the day the Fed started cutting rates, like literally to the day.
Yeah. So the key is you can't count on that. to make your decision. So you just got to have a well thought out financial plan. You've got to realize that there are a lot of unknowns out there, and this is one of them. And the bottom line is you can't fight the Fed, right? You got to flow with it. You can't fight the Fed. You got to roll with
That's
it.
right. All right. So the S&P credit rating agency on the US has said that the credit rating is stable but strained. So the key fact here, a AA plus rating that the S&P Global has on the United States credit rating, that actual AA plus rating, they affirmed, but because tariff revenue helps to offset the fiscal drag from the one big beautiful bill. Although the July deficit was up 20% to $291 billion.
Wow.
So the warning is there's a downgrade risk if deficits keep climbing or if institutions weaken. So the question is, does AA plus mean crisis, Jake?
Well, first for our audience, this is just so they know, AAA is like the best rate. And the government used to be AAA. Do you remember that? Were you an advisor when they got downgraded, Cory?
Yeah, for all the downgrades. Yep.
So no, here's the problem. This S&P global rating people, they're flawed because I still am not happy with them because if you remember during the financial crisis, they had all of these companies rated, what was it? Lehman Brothers was AA rated on a Friday and they're out of business on Sunday. So how much do these ratings even matter is my question. My first answer is no, that I don't care what S&P rates the US government. Their ratings don't hold much water, in my opinion, Cory. Now, we talked about this last week. Now, the government racking up the debt is not a good thing. However, they can still print dollars. They can still do things to service that debt, which might not be the best answer for this. So I don't think it means a crisis is my point. I don't really hold much water in those ratings. Yes, the debt's still a problem. We talked about that last week. So for our audience, if you want to go check out episode 362 of Upticks, we talked about this, Cory and I did at length. But what are your thoughts?
Yeah, I think I agree with really, Jake, everything that you said. But I also think that just because of what happened prior to the financial crisis doesn't mean that we should ignore the fact that the credit rating agencies that rate the debt of our country are saying if things continue on the path they're on, there could be threats to this credit rating. Just like Jerome Powell, our Fed chair, has said very publicly in press conferences, the path that we're on fiscally is unsustainable. I suppose that can be disregarded and ignored, but I firmly believe in my bones, Jake, someday it's going to matter. So I think for people that are paying attention or that are watching or listening, the idea here is you really want to have a well thought out plan and a well thought out portfolio to make sure that you're prepared for whatever comes.
Yeah, and let's get into that. So what does it matter to people and their money? The deal is sovereign country ratings indirectly will affect all of us if we're looking at borrowing costs. Because if the USA is the gold standard, right? We're supposed to be, one of the best financially structured countries and all the, rigmarole.
And we are, for what it's worth.
Yeah. And well, this isn't a knock on US, but the point is like, how can another, we're going to talk about Target. How can Target be rated better than the government? It's hard, right? So the government is setting the bar, and that again can indirectly affect borrowing costs. So that's why people should want the USA to have a AAA rating. They should want that. What's crazy to me, Cory, has it ever been upgraded since they downgraded? I don't think they've upgraded it since.
No. And to me, it seems pretty rational for why.
Yeah, because I get it. But my point is, these rating agencies. I don't know. I don't hold.
I hear you loud and clear there.
In their opinion. But my point is, so it does indirectly impact you if you're borrowing, because again, it's hard to have a better credit rating than the government when they print the money, right? And they make the stuff. So just something to be aware of. Here's the myth, Cory. A rating headline moves markets by itself. So what's the myth in that? Is that true?
No, I think that's false. I think we've seen this year, it's been proven that that's false because there was a credit rating downgrade earlier this year and the market just kind of moved right past it.
Yeah. So it's more about the path of deficits that we care about. Yes. So when they can get this ship turned back around and start balancing the budget, that's probably when the credit rating will improve. And that's probably would help borrowers, I would suggest.
Right.
There's no guarantee, but that's kind of the thought behind it.
Right. I just think, though, the tariff revenue, for example, does help the deficit. But when the deficit's up 20%, $291 billion, that's a lot of money. Like the deficit's being financed. That's just I I don't know if the government can cut enough spending to get that deficit number down to zero.
I don't know.
Time will tell. But I think that's what we have to prepare for. There's no sense in trying to predict what's going to happen.
All right, let's move on. That's enough of the government. All right.
Good idea.
Ozempic's price plunge, Corey. Novo Nordisk offers Ozempic to cash-paying U.S. patients for only $499 a month via their official site. They get patient assistance and good RX, I guess good prescriptions. This follows political pressure, including a July letter from President Trump, and it aims to expand access and steer demand from compounded versions amid spotty insurance coverage. So insurance isn't always covering this for people. So here's a challenge, Corey, for our listeners. They're juggling health goals, costs, and coverage confusion. So do you think this is a move in the right direction for America and for patients?
I think so. I think the simplification is a positive.
Yeah, let's be clear here. This show is not medical advice, right? So I'm not saying to take Ozempic or not. We don't know of any long-term health implications. I think losing weight is a good thing as long as you do it in a healthy way. I mean, that's should be common sense. Again, I'm not a doctor. This is not medical advice.
I agree with you.
But I think that the opportunity here is to, if you are overweight or obese and your doctor, full disclosure for compliance, your doctor thinks this is a good idea, then from a financial standpoint, you can discuss budgeting frameworks. Maybe your health savings account can help pay for this, right? Or maybe you plan it at the year end when you've got a bonus. But again, with our clients, we just want, if they want to do this and their doctor signed off on it, my point is there are some ways to allocate this because, we're talking $500 a month, so $6,000 a year. But I don't know, Corey, if your doctor says to do it and you have a health issue coming down the line, I think it's well worth the investment if it's going to allow you to have a healthier lifestyle, right? I mean, so I'm excited about the opportunity. I'm a little nervous about the people with side effects, right? It's the American way, sadly, that people just think we can take a pill and all our problems are solved, and that's kind of what this is, which bothers me a little bit about it. But again, if somebody has a problem, if they got a real problem and their doctor is signing off on this and their doctor is convinced, then by all means, our team at Falcon Wealth Advisors are here to help make sure that they can afford it and that they are using the appropriate accounts, whether it's a health savings account, flex spending account, whatever, to help pay for it. But here's a question. And then we're not going to talk individual stocks on here, but the myth is if they lower the price, is their stock thesis broken? And again, for compliance, we're not giving advice, but what do you think about that? Just from a general outlook, Corey?
Yeah, I think that, we've seen a lot of movement in these companies that are producing these drugs. We've seen basically a big drawdown, Jake, since the initial we saw things move a lot higher, and then we've seen the stock price move quite a bit lower, over the course of the last year or two. But I think the market and market participants, often are able to price things really volatile in the short term, but things work themselves out long term. I don't think that this is going anywhere. I think that, whether or not this fits into someone's lifestyle for their own personal health, it remains to be seen. And that's really should be the driver of what people are choosing to do with their own money and with their own health. But I think that this is here to stay. And I think that, there of course is, who knows what the future is going to bring, but I don't think the fact that they're changing the pricing means that the stock thesis is broken.
Right. It's just, who are we to judge? Hopefully they're well thought out. And again, I'm not endorsing any stock, but there's volume and there's price. So maybe it's a volume play. So
they'll be able
$499
to distribute it more. Yeah.
Yeah, exactly. The $499 isn't just a discount. It's a strategy to get it in more people's hands. So
right. Get everybody taking it, then they can raise the price, Jake.
Get them addicted and they take it. So again, this is not stock advice compliance. We're not trying to you should not be buying stock based on what we're talking about. We're just talking about strategy with the company, and we're talking about Americans hopefully getting healthier. But again, make sure you're checking in with your doctor before you do anything.
All right, retail shakeups. So Target, not talking investment advice here, but we're talking about companies. Target's quarter, Jake, in leadership. Target beat on its earnings and on its sales. They reaffirmed their outlook despite declining sales and traffic, and they named a new CEO effective in 2026.
Who's that?
Now,
who's the CEO?
His name is Michael Fidelk.
Fidelk.
All right, thank you. That's
That's
better.
what I would
That
say.
makes
Michael
a lot more
Fidel.
sense.
And isn't he a homegrown guy? Isn't he a Target
He is.
guy?
Yep. He's
Okay.
a homegrown guy.
Are you a big
Makeup?
Ulta guy? You a big Ulta shopper?
No, I don't think I've ever stepped foot in an Ulta.
You've been in Target. You've been in Ulta
It's been a long time.
since
It's been
you've
a long
been
time
in
since I
Target.
stepped foot in a Target. Yeah,
You
it's
don't
been
go
a
to
while.
Target? Where do you get
I
your
don't know the last time I went.
Where do you get your toothpaste?
Online. I order it. It comes to my doorstep. Soon a drone's going to be dropping it off for me, Jake. Probably. Who knows?
You don't. Where do you get your diapers?
Target. Cassie buys them though. She does a good job. We're like, would
So
you like
your wife
Target
goes,
diapers?
is she a big Ulta lady?
She's not. No.
So they're ending
No,
their
she's not.
shop. So I guess when you go into Target, I think I've seen this. When you go into Target,
Yeah.
they have a
ending-
shop in the shop. It's an Ulta
Yep.
shop in the shop. And August of 2026, they're going to kick them out of their store. So what do you think about that?
What I read, Jake, is that operations and staffing challenges is the reason for doing that, which
Okay.
makes sense. I think that
Yeah.
makes sense. I mean, it's they're two separate companies, right? And I think sometimes these partnerships between companies work, and sometimes they don't.
Yeah. So there's the challenge here is there's confusing signals. Is Target doing well? Is Ulta doing bad? Like, is there falling traffic? You know, partnerships are unwinding. Does that mean
Yep.
things are going bad? So here's the opportunity, Corey, is that retail pivots in their operations affect their margins and inventory turnaround and consumer inflation, right? Maybe consumers don't want to pay for Ulta because it's expensive and they're going and getting their makeup online. I don't know. The point, again, this show is not investment advice, but the idea is that I don't want people hitting the panic button on retailers when they make these shifts. In my opinion, you can look at Blockbuster and say there's somebody who didn't shift that should have. So I would argue I'm okay when companies shake things up. This Michael Fidelk, is that what we're calling him?
Fidelk.
You know,
yeah, we're going with Fidelk. That sounds right.
And maybe he can do things for Target to get it better. That's a breath of fresh air, and maybe he's the guy to lead them on to their new deal. So the myth here is that just because they're kicking Ulta out of their store doesn't mean that we're going into a recession. I think that's what some people think.
Yeah,
I
really.
think that's what some people think. Yeah. So again, I'm not even talking
Makes
about
sense.
Target as a company. Like they're like, oh, they're unwinding. 600 locations say it's bad, so the economy must be bad. But that doesn't necessarily mean anything.
Correct.
It's just a strategic refocus.
Yes.
That's all that is. It's not saying that Target's going out of business or Ulta's going out of business. It's saying that it didn't work.
And the old
Didn't work.
adage, right, Jake, is that if you find yourself in a hole, the best thing you can do is stop digging.
Yes.
Right? If you tried something and it doesn't work, that's life, right? And it's business. It's a lot of things.
Yeah,
Try
so good
something
for
that
them.
doesn't work. Yeah, it's a redirection. Hopefully in an effort to point the ship in the right direction.
There we go. Was this your bonus one in here, Corey, or no?
It was.
No. Okay, let me kick it off for you.
All right, please.
So Innovation Watch, CME Group, and FanDuel announced a partnership to develop an innovative events contracts platform. You're going to have to explain what this is. Hold on. It's a fresh overlap of markets, prediction tooling, and mainstream audiences. What do they do here? So the Chicago Mercantile Exchange, is that who we're talking about?
Correct. Yep.
And
Yeah,
FanDuel,
the most legitimate
betting,
exchange operator in the world.
and the betting site. What do they
FanDuel.
do, Corey? What do they do?
Yeah, so on FanDuel, people can bet on whether or not the Chiefs are going to cover the spread. They can bet on how many touchdowns Patrick Mahomes throws. They can bet on sports. But soon, they will be able to bet, Jake, on CPI prints and interest rate hikes or cuts or oil prices, the same way that they bet on sports. Dollar contracts is what they're offering too.
With what contracts?
$1 contracts. So markets like futures markets that typically requires, a level of sophistication as far as investment goes. It's being gamified, right? So people can bet on, I guess after, you could bet on a daily basis whether the S&P 500 is going to be up or down. You can guess yes or no. Oil prices, inflation prints, GDP numbers. Like in my opinion, Jake, this is quite literally Wall Street becoming a casino in the sense that people are going to be betting up on what's happening every day. And I think
what do you think about this? What's your opinion?
I think it's absurd. And I think it's ridiculous. And I think it's
Do you?
innovation. Who needs this?
Here's my take on it, Corey. You want to know what I think?
All right.
I think it's great.
Sure.
I don't
Why?
think it's absurd at all. Well, first off, I think gambling is bad. However, I want the gamblers gambling on FanDuel. I don't want them gambling in the stock market. So if you could pull more people out of stocks and leave that to the serious money, the investors, and let them go lose their money on FanDuel, Corey. Let them. So you want to go speculate, you want to go gamble, go to FanDuel. You want to invest, that's where you go to the stock market. So to me, Corey, I think it's brilliant. I don't think it's absurd at all. I think it's brilliant. And credit to CME for seizing an opportunity to make money. Now, again, this is a dicey episode. I am not.
I don't agree.
You heard me say I don't like gambling, and go call an addiction hotline. I don't think anyone should gamble. Actually, like if you want to do it for a cheap thrill, once a year maybe, and it's very, very small, like okay, but like, so you think that it's going to encourage more people to become addicted to gambling? Is that what you're thinking? Is that why don't you like this?
Because I think it's completely unnecessary. I think that there are people, Jake, especially younger people, that are going to encounter finance for the first time through the same dopamine loops as sports betting.
Yeah, but that's
what I think.
No, you're not encountering finance through dopamine. You don't encounter finance through FanDuel. That's my point. Like, I think it'll help delineate where they're gambling and where they're investing. They're like, oh, I got my Roth
I think the
IRA.
opposite's going to happen, but we'll see.
My argument is they're going to be like, I got my Roth IRA with Falcon Wealth Advisors, and they're managing my serious money, but I go bet on the futures or I bet on stocks on FanDuel. Like, I think it's separate. Like, we have clients that gamble on sports, and that doesn't bleed into what we do for them with their retirement account. So why do you think this is different? Because you're betting on financial markets?
Yes. I think the way that people view financial markets is going to change. And this is going to take the focus away from the long term, which is for serious investors. Go ahead.
Do you think when they legalized gambling on sports that it changed people's opinion of sports?
It changed my opinion, but I don't know I can't speak for everybody else.
How did it change your opinion?
Like it's for me personally, gambling being so in my face around sports has sucked a lot of the fun out of sports in the first place. Like I'm not
really.
Yeah, for me personally, like my interest is lower. It's less. Not
really.
More. Yes, because I think Jake, my personal opinion is that if we all look in the mirror and ask ourselves the question of whether sports gambling is good or bad for people, and whether it's good or bad for their finances, and whether betting on GDP and CPI numbers is good or bad for people's finances, I believe that deep down, we know the answer, and we can rationalize it however we want, and they can call it innovation. But my opinion is that the biggest futures exchange in the world is walking arm in arm now with a gambling app. And I think that for the future of investing in finance, I just don't think that's going to be a positive for the individual. I don't. And I would love to be proven wrong.
I know. And I agree that gambling is bad and not good for your financial plan. Yes. However, Corey, people are still going to do it.
Agreed.
That doesn't make it right. However, I want them doing it on FanDuel, not in their Roth IRA. So that's why I think it's okay. Like, if you got a Roth,
remember when you used to have to go to Vegas or go to a casino to bet?
I know. Yes.
Okay. Now you could do it. I mean, as soon as the Chiefs game's over on Sunday night, Jake, I'm going to go place my bet on whether the market's up the next day.
Are you?
Maybe.
What are you going to
bet? I see if literally the app that I log into to bet on sports is the same app that I can bet on the direction of financial markets. I struggle to imagine how that's going to be beneficial for people. And I hear your point loud and clear. And I would love if this helps people delineate the difference between speculating
that's why I think
and investing.
I think it's good, Corey. It's separation of church and state. I think it's a good thing. Because I think, Corey, way too many people are gambling in the stock market. And I love the fact that
I agree with.
That I can tell clients now, is this live? Is this happening right now? Is it already out?
No, I don't think it's out quite yet.
Okay. But whenever it comes out, I can tell clients when they want to speculate with their IRA, I say, you know what? Why don't you go open a FanDuel account and do that there? Because we aren't doing that here. Like that, to me, that'll be an easy... It actually, I think, will help influence better behavior, believe it or not. I think it will. But I think it's going to take guys like you and me educating our clients and our audience on Upticks. That way they can separate. It's like, all right, the stock market is your boring, long-term. This is going to sustain your lifestyle. This is going to provide you food and shelter and family vacations. That's what this account is for. Your FanDuel is for your cheap thrill. And we can build into your financial plan a FanDuel budget. $100 a month for FanDuel, $200 a month for FanDuel, $2,000. I don't know. It depends on how much money you have, right? But we can build that into the plan, Cory, and I think that's why it's good. So the key here with the myth is that novelty increases risk, not necessarily returns. And I think that's what you're worried about. That like it's almost like making it easier to get cigarettes is kind of, I think, the way you see this. And
yeah, put the casino in your pocket.
I don't see it that way though, Cory. I don't see it that way because people, I'm telling you, Cory, how many people do you know out there that are probably day trading the market and they're doing stupid things in the stock market? Get those people out of the market and get them on FanDuel. Get them out of the market and into FanDuel.
So do you think if all of those speculators, Jake, moved to FanDuel and all of the people speculating on the direction of the market on a daily basis or in oil prices, whatever it might be, do you think that ultimately has an impact on what happens in the markets?
Yes, I think they'll start. I think what will happen is the CME and FanDuel can start selling that research. However, it doesn't mean that the herd is correct, right? So, but I think one day that'll be a research report that you can read. Probably because don't they already publish that? Like this is what people are betting on the Chiefs or whoever. So they're going to say this is what people are. Because don't they do this in Europe? I think they do it in Europe already. They bet on market movements, and so I think it'll be a good data point that we will use for research. Now, does that mean we're going to make our decision on that? No, but I think it'll be another research data point that actually is not a bad thing.
Let me ask you one question, Jake.
Sure.
Who do you think this is going to benefit? Who's going to benefit from this? Truly.
I think it's going to benefit the person who recognizes that they are gambling in the stock market and they move that money to FanDuel. They will benefit from this because they're going to stop gambling their Roth IRA, Cory. Okay. That's what I expect the outcome to be for a set group of the population that utilizes this. So I don't think it's going to be a win for everybody, but I think people will benefit from this. But I don't think everybody will. You're right. I think your fear is that more people will gamble on things they shouldn't be gambling on.
Yeah.
Yes, that could happen. But my take is that I think it'll remove people from gambling in the market and they'll go gamble on FanDuel. And then we'll give them a FanDuel budget. And they'll stop messing around with their 401k. You know, people gamble their 401k.
I know. No, I know. And
that's bad.
I realize that.
That's the real problem. They gamble or they gamble their inheritance that they got from their mom or dad or grandpa or grandma. That's bad. Mm-hmm. That's sickening.
Right. So gamifying this is going to help that?
Yes, because you can allocate a budget. You can allocate a budget. Say, all right, you've got a FanDuel budget. You're going to put $100 in your FanDuel account a month, and you're going to gamble the heck out of it. Yes.
What if you just put that $100 in a retirement account or a Roth?
No, instead? Cory, because you don't getting it because they are already gambling their Roth IRAs is my argument. So let's say they have 20,000 in a Roth, they're gambling that. I'd much rather them gamble $100 and FanDuel and lose it as long as the financial plan can support it. So my deal is let's separate it because they think these people that are gambling their investments, they think that's investing and it's not. So my point is it's going to separate the investors from the gamblers. And I think that is good.
Time will tell.
I think if somebody, I would much rather somebody lose $100 a month on FanDuel, Cory, than save that in a Roth IRA, save that $100 a month in a Roth IRA and gamble their Roth IRA, if that makes sense. I would rather them.
It does.
So that's what I'm getting at here.
Sure. But if it's,
did I convince you yet? Go open a FanDuel.
No.
Do you have you probably have a FanDuel account, don't you?
I don't.
Okay.
I don't. And I don't plan on opening one to do this. But that's just me.
You also don't gamble your 401k. You also don't gamble your retirement money.
That's right.
So you're not who I'm talking about.
Yep. As someone in this industry, I see this and I think this is.
I think it's a good thing.
All right. You have not convinced me, but I'm like I said, I'm totally open to being wrong.
I think the people that need Gamblers Anonymous or whatever it's called are going to need that regardless. So the sad reality is, I think the only way to solve that, Cory, is to make gambling illegal again. But you know what happens? Those people go find bookies, and they're going to do it anyways.
Right.
So
that logic, though, is like, well, why don't we just legalize everything?
They did. That's what they're doing. They're legalizing marijuana all over the place. And you know what? I don't know the studies on that. Do more people smoke weed now than did before? I don't know. Yeah. But maybe if you can regulate it and tax it, I don't know. I don't know the answer on that. All right, let's go to the last one here.
All right, good idea. Tech quick hit, Pixel powers up. So our key fact here, Jake, Google's Pixel 10 leans into Gemini AI with tools like Magic Q and Camera Coach that are positioned against Apple's delayed Siri upgrades. So when we're talking about productivity and artificial intelligence adoption for investors, my question for you, Jake, is what do you think about this?
Well, I was talking to a guy the other day. Have you used Gemini?
Mhm.
He says it's legit. So I haven't used it. I think
Gemini, though, is what's, if you're Googling something, that's what's feeding the answers at the top before all the web
okay.
pages. What you're getting right there is Gemini.
Okay. So I have used it, I guess.
Yep.
I guess he uses it for investment research, though. It's like a do-it-yourselfer. Anyways, I posted about this the other day on Instagram. I forgot my commercial. Anyway, quick commercial. Thank you all for tuning in. We got too fired up, Cory. Thank you all for tuning into Upticks. Please like, share our content. The whole point of Upticks is to enhance financial literacy. And also, if you think our show's any good, give us a thumbs up or a 5-star rating. Also, you can follow me out there on Instagram, Jake_Falcon_CRPC. And Cory is Cory Bittner KC. So I posted about this. I think that AI is still in the very much the wild, wild west. I think these major corporations like Google and Apple are in a race, but they're in a race to get it right, because I think there is a lot of risk that if you race, Cory, and your AI is clunky and wrong, right? Just flat out wrong and bad, I think that you will lose confidence in your consumer. So I think that's why Apple is delaying it. Maybe they're trying to get it right. So I don't know. It's fun to see them race, because what's good for us as consumers is that hopefully in the end there's going to be a really, really good product out there that people will benefit from. So I think that we are using it at Falcon Wealth Advisors. We're using Copilot, and our team is. I've challenged our team to just try to find and it's all about prompting. That's the hardest thing that I've tried to teach our team, is like, you can't type into it. You can't type into Google the same thing you would type into Copilot. It's not how you have to coach it and prompt it and explain what you want it to do.
The better the input, the better the
better
response.
output. Yeah. So I think that's exciting. And I think it's the thing. And now, does that mean it's a place you should invest? Not necessarily. I always argue about 3D printers. Like, you don't hear about those as much. People have them and companies use them, but we prefer to invest in companies that will benefit from new technology. And so I'm not going to give stock tips again on today's show, but I think that you need to embrace it as a consumer. I think the companies are fighting it out, which is fun to watch. And I think, time will tell. You have thoughts on this?
Yeah, no, I echo a lot of what you just said, Jake. We are very aligned in this regard. I think it's early on. There's still a lot that remains to be seen, but I mean, some of these tools are legit, right? I mean, I use them, you use them. I'm sure a lot of people that are watching do. And to just think about the productivity that can come with them, I think is exciting. But there very much is the arms race, like you said. And I'm sure that there are, some companies that are, well, actually, we know for a fact that companies are spending a ton of money to build this out. So it's going to be here with us for the foreseeable future. And I think learning about these tools and learning how to use them well is actually something that's wise for everyone.
Yeah, that's good, Cory. That's good. All right, let me recap, Cory, and then we'll sign off with any personal notes you want to share. So recap: the Fed did not lower rates yet, but they may. So this is an opportunity. You have a window to rebalance, or just make sure your cash is set up the way that you want to set it up, or your bonds, or whatever. Meet with your financial planner is the end on that. The S&P keeps the AA plus rating, but flags deficits. So again, we got to watch that fiscal path. Cory, you're really good about that. I think you pay attention, and that's good. Ozempic's $4.99 cash, Cory. So just meet with your doctor. And again, if you want to do this and your doctor signs off, we can help you budget that into your financial plan. Target seems to be, shifting things around with a new CEO, getting rid of Ulta in 2026. So this is just a retail strategy reset. That doesn't mean there's a recession coming. Cory's favorite, the CME and the FanDuel partnership, Cory. Risk does not equal return. Consider yourself warned. Neither of us are advocating to do this, by the way. Gambling is not a good idea, a good spend of money, in our opinion. But time will tell to see if that helps get the gamblers out of the market or make gambling a bigger problem in America. I don't know. We'll see. And then Pixels 10 AI. It's basically a productivity arms race. So it's fun to watch. Embrace it. I would challenge all of our listeners to use ChatGPT or Copilot or whatever. Get familiar with it. You don't want to be that person that 10 years from now, the person that said, I don't trust the internet, I never get on the internet, because we use the internet almost every day.
Yeah, love it or hate it. That's right.
Yeah, you got to embrace it. It's new technology, and it can make your life more productive and better. So quick call to action. If today's show helped you out, please follow, share, like it. And if you want more content on retiring right, go ahead and check out the link in the description. You can get a free copy of my ebook called Retiring Right, Smart Steps for Exiting Corporate America. It's 150 action-packed pages on retirement. Also, if you prefer a physical copy or to listen, check it out on Amazon. All right, Cory, as we land today's episode, do you have any fun personal stuff you want to share with the audience?
Yeah, just a neat experience that I had recently, Jake. One of the newest team members here at Falcon Wealth Advisors, Calvin, who's working as an account manager with our operations team currently. Calvin and I had the opportunity to go back to we have the same alma mater, UCM, University of Central Missouri, where I sit on the Alumni Foundation
Is this
board.
their thing, the mules?
Yep, the mules, that's right.
Is this how you do the hand sign?
Yeah, it's this. Snouts out.
Snouts
out, just like that. So Calvin and I had the chance actually to go back along with a few people from the Alumni Foundation and talk to the University Board of Governors about the role that Calvin played as an alumni ambassador when he was in college, his presence in athletics on the golf team, really how my relationship with him began because he was an alumni ambassador, and how I served on the Alumni Foundation board. Just talking about the power and the benefit of networking. So it was a cool experience.
Yeah, good for you guys. Go on back down
you?
to Warrensburg. I went to Southern Hills and took a few great clients down there. And what was interesting is I played the professional tees, Cory, all the way back. First time I've done that, all the way back. And I shot an 87. And you know what? I didn't feel that bad about it.
Good.
So 2 days later, I went and played Mission Hills Country Club from all the way back there, the championship tees, and I shot 72. I shot 15 shots better at Mission. And I'm not saying Mission is easy. I'm saying that's how much harder Southern Hills is. It's a championship level golf course. It is not for your weekend golfer. It is not for a casual golfer. It is a very fun.
It's not for Cory Bittner.
No, I mean, you wouldn't have fun there, Cory.
No.
You just wouldn't.
No.
You just wouldn't. So, but I thought that was pretty cool. I took a client there. He's really good. He shot 75 from those back tees, which is legit. Yeah, it was fun to watch. But
and good for you for your 72. That's pretty good.
Yeah, and
salty.
I hooked it OB on Belinder on the last hole. So I was even par going into 18, which would have been a 70, and I doubled the last hole. But I didn't care. I played good. I played well enough.
72 is solid.
Yeah, I felt pretty good about it. I had 4 birdies and felt pretty good about it. So game is in prime condition right as golf season's ending. What do you know?
Yeah.
What do you do?
Yeah.
So, all right. Well, thank you, Cory, as always, for the spirited discussion and debate. And thank you all for tuning into Upticks. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website at www.falconwealthadvisors.com and click the Contact Us button if you'd like to meet with Jake and his team.